What's up, everybody? Welcome to In the Chaos. My name is Brad. That is Fat Man Zoom. The stock market is crazy and chaotic. We made it our mission to help you own it, and we're in a little bit of a different setting. We figured we'd try to switch things up. Again, we're in our new studio, so we're just trying to figure out what works best. So make sure you guys are still leaving us comments down below on what you guys think if you've been following us for some time. But today's topic, Fat Man Zoom, I decided back in September that I wanted to start off with a small account and try to get it over PDT within a reasonable amount of time without risking too much and doing anything too crazy. And I did that. So in about 5 months, I ended up taking a $5,000 account and getting it up over PDT. As of this recording, it's sitting around 27K, which feels pretty good, if I do say so myself. I did it all over again. You know, I've been trading for a while. I decided to start over and see where it went. Yeah, and PDT is like this the holy grail of new traders. And so this is a huge benchmark that people want to hit. So we thought it'd be a good opportunity for us to discuss that a little bit. I wanted to talk to you about really the keys to how to reach it faster. And that's what people want to know. So we're just going to talk through it. But first, let's talk about what is PDT and why it's important. Yeah, so PDT, if you guys don't understand what that is, it's called the pattern day trader rule. And basically what that means is that if your account's valued under $25,000 and you have a margin account, you can't trade more than, or you can't day trade more than 3 days in a 5-day trading period. So you can't be in and out of a trade in a single day more than 3 times within 5 business days. And so that was the big thing you wanted to do, and we called it the Small Account Challenge. You hit that 25K. Congratulations, my friend. Thank you, sir. So the keys, and we talked about this beforehand. Here are the keys that you said were vitally important for you to reach that PDT. Yeah. I'm going to list them, and then we're going to break them down one by one. So you said determining a set amount to start with. Yep. Setting a goal, having a plan on how to reach that goal, the red zone, which we'll talk about that. That's a Chaos Crew favorite. Not being afraid of taking profits, and buying best in class. So let's take these one by one. I love all of them. I think they all make sense, but let's dig a little bit deeper. So establishing an amount, and I know this is a question that we get all the time. How much do I start with? So how much should someone start with? Well, I mean, I started off with 5,000. I think that's a pretty reasonable amount. And I think that the rule of thumb should essentially be between $5,000 and $10,000. You know, can you still be successful with less? Of course. Can you be successful with more? Absolutely. But I think that if you go too far beyond one way or the other, too far outside that kind of box, so to speak, you kind of run into a couple of risks. If you don't have enough, lots of times you end up making 1 or 2 bad trades, and that blows up your account if you're starting off with like 1,000 or less. And then the other side of that, same thing. I think a lot of people who might be well off or have a lot of money to work with, let's just say you have 100K, and then you go buy something like, you know, Aurora Cannabis or something like that, and then before you know it, half your account's gone, and then you give up too fast that way as well. So I think like having a reasonable amount of money that you have room for error, but you're not, you know, tempted to risk too much, I think is just a really good, happy place to start off with. Yeah, and I like the 5,000. We've talked a lot about what that number should be. Yeah. I love 5,000. The thing about numbers like 10,000, if you go down to $1,000, well, 1,000, you're talking more about buying power. But the thing about those is the psychological impact they have. If you're at 10,000 and you have a down day, you're now actually losing 1 digit. Right. So that kind of messes with you a little bit, where it's like, oh, I just went from 5 figures to 4 figures. Yeah. And then again, the emotions start coming into play. So I worry about that for people who start around that 10,000. And you know, when you used to do penny stocks, we'd say 1,500, not 1,000, because if you went from 1,000 to like 950, it just messed with you. It does. And so the flip side to that is that if you start at, let's say, 5 or 8,000, if you move down 500 or whatever, it doesn't really make a difference, but you're really close to 10,000. So you could actually use that psychological number to help you, because if you're at 8 and then you get to 10, that could be motivating. Yeah. So I think the psychological part is the one that people really don't put enough weight on into how things move forward for them. Yeah, absolutely. And I think that, you know, $5,000 is not a small amount of money to most people.
True.
So like if you're using a $5,000 number, you're also more inclined. I think most people are probably more inclined to try to protect that, and they're not going to risk as much. They're not going to, I guess, psych themselves out thinking that they have all this money to spend, because they really don't. And it was money that they actually worked really hard for.
Okay, cool. So determining amount was the first one. The next one we have is setting a goal. Talk about that a little bit.
Setting goals, it really comes down to not necessarily, we talk about SMART goals in business all the time. So like having reasonable numbers, not just saying that you want to lose 50 pounds, but you want to lose like as your end goal, but you want to make sure you're losing maybe 10 pounds a month to get yourself to that 50 pounds, for example. So this kind of works in that same way. You know, set yourself a goal of like, okay, I want to make, and people fall into this trap too of like, I want to make $100 a day. I think that's the wrong way to go about doing it, because it's just too short term. I think that if you're setting yourself a goal maybe to make $500 to $1,000 a month with your $5,000 nest egg, I think that's probably more reasonable. You don't have to do it that way, obviously, but setting yourself up SMART goals like that just makes a lot of sense. Yeah,
that's a good point, especially the time frame. So when I track my account, I have an Excel spreadsheet, and I have sort of a model which has my end goal, which is great. Like if your end goal is PDT, begin with the end in mind. But you're right, like you have to be able to break that down smaller. And so for me, it was, okay, for me to get my goal, I'd have to hit 1.5% a week. That seems way more realistic than to say, oh man, how am I going to increase this account by 100% or 150% or whatever, and being able to do that. And that was the other thing I do want to mention early on, which is your account didn't just shoot straight up, right? So talk a little bit about how your account grew as far as the trajectory of the account, because you were saying that actually you started off red.
I did. So I actually pulled up. So basically, I decided that I was going to do this smaller account challenge at the worst possible time. I started it at the very end of August, beginning of September. And right around that time, if you guys recall, if you guys were trading around that time, after Labor Day, the stock market, I wouldn't say crashed, but corrected pretty sharply. I mean, really the whole month, it was really tough, specifically in the tech sector. So then, of course, I was buying Tesla after the split. I bought Apple after the split. And then, like, that just did not do, or no, I bought them before the split and held them thinking they were going to continue, and it didn't. So then they ended up falling off. And actually, if I'm looking at my account right now, and I can kind of max this out, I was red from pretty much leading all the way up to the election day. So I had a couple of nice green days, but I was pretty stagnant, pretty flat leading up to election day. And then after election day, things started to really move in my favor. And overall, I ended up adding to this account as well. It wasn't just 5,000 and let's just see where we can take it to, which I think we definitely should disclose. I was adding 10% of YouTube revenue, which is around YouTube revenue is around $6,500 a month. So I took $650, added to that as well. And then, ended up growing this account. Now we're up over 100% profit, about 120% profit, along with adding to it every month. And the reason that I did that was to simulate, a 9-to-5 job, so that if you guys are out there working a 9-to-5, you would take 10% of your salary, put it into your account to add on to that $5,000 starting point, because I think that's just the most realistic way that you're going to learn how to either short-term invest, long-term invest, what have you. I think that's just the best way to go about doing it.
Yeah, and I would say the other option as well, which is in the same vein, is 10% of what you start with, right? So like if you're, that way you can budget that as well. So the best example is we say $5,000 and then $500 a month.
Yep.
One of the common things we tell people is like, don't be afraid to trade with your retirement. And actually for what we're trying to do from a tax perspective, if you feel confident, that's actually a great way to do it. I trade with my retirement.
Yep.
And so for somebody who qualifies for a Roth IRA, it's $6,000 is the limit. So if you're putting in $500 a month, boom, you've hit your max for the year, your max contribution for the year. And then now that's set. So that's another way you can do it, but it's the same idea. It's like adding to it consistently, and that way you're able to maximize opportunities. So the question people are going to ask, and let's just get it out of the way, is when you're saying you put 10% of your revenue in. To be clear, when you're talking about your percentage gains, is that inclusive of the revenue or not?
Yes.
Okay.
So I've made over $13,000 in profit since starting this account, but that's with the $5,000 I started with and what I've added to it. So so my capital all told is around 13,000, give or take.
Okay.
And so then I'm up another 13,500 and some dollars.
Got it. But it doesn't, but that's not the percentage. So the percentage is the money you've made, but obviously you've built the principal throughout.
Correct.
And so it's not, hey, if I had $500, my percentage goes up.
Right.
No, it's what you're actually making off of the trades. Yeah. That's come up a lot, and I just want to make sure people understand that part of it. So the next one is having a plan on how to reach that goal. And so you've already talked a little bit about the plan, but like, why is that so important as far as growing your account faster?
Because you're setting yourself up with a plan, so you're not just going in there and trying to wing it every single time. You're actually setting yourself up with a strategy, and that's the best way to become more consistent. And consistency is 100% key. You're not going to get anywhere in the market if you don't have a consistent strategy of just like, okay, I'm going to cut losses here, or I'm going to take profit there. And really, that's the name of the game. You're not going to get anywhere if you don't have a plan and you're not consistent with it and sticking to it.
Yeah, and I think that one of the things when you think about plans and strategies is it's energy spent if you don't have a strategy, right? Like if you're questioning what you're doing or spending time trying to figure it out, that's just more time and energy. Whereas if up front, you've had that plan and that strategy, there's no questions asked. You're really just executing, and then you look back and you say, okay, is this working or not? Do I determine? But really, you're able to just move forward and not have to worry about the outside noise. And that, I think, is one of the biggest challenges that one could experience is, listen, there is not one strategy, right? There's a bunch of strategies that could work. And I think one of the hardest things is like silencing the noise, right? Because you have a strategy and then other people come in and they're like, oh, well, I wouldn't do it that way, or, oh, I wouldn't do that way. Like that to me is one of the most challenging things. It's like trusting yourself and trusting your plan and understanding that multiple plans can work. So if somebody comes to you and they're like, hey, this is what works, that is true. That could be true, but it doesn't have to be true for you. And so I think people can get distracted by that. Whereas if you have your plan, you're like, okay, I hear you on that. But right now, this is my goal. This is what I'm setting out for. And then when you're done with it and you reached your timeline and reached your goal, then revisit it. Look at other plans and take them into consideration. But that's just a distraction. Next one. And probably, I think maybe the most important one, red zone. So we talk about it in the Chaos Crew is the red zone. What is this concept of the red zone?
Well, first of all, what is the Chaos Crew?
Let's talk a little bit about the Chaos Crew. So if you haven't been here before, we have a members only group that's called the Chaos Crew. We have a Discord. We have a daily watch list that also gets you supports and resistances, access to your small account, your portfolio, and also we do a weekly live stream, among other things, where we devote our time to answering your questions in a Q&A. So if you guys are interested in the Chaos Crew, click the join button next to subscribe. It's $4.99 a month. Cheap.
$4.99.
Yeah, $4.99. So definitely click join and come to the crew.
We'd love to have you there.
So let's talk red zone.
So the red zone that we have dubbed is literally, so there's a lot of people that get super nervous, especially when they're starting to trade and they see a red day in the market, or that their account has started to go red for the day, and it forces them to really kind of start to panic, at least for newer people it does. And we actually take that as opportunities to buy on good quality companies where nothing's really changed with them fundamentally. And, we always like going back to a good core group of stocks, having about 5 or 6 good core group of stocks, good companies that that you could just buy and feel comfortable holding on to. really is a good opportunity to do that on days, and we kind of dub that the red zone.
Yeah, and in football, a football field is 100 yards.
Yeah.
But the last 20 yards, which is a red zone, is the hardest to execute in, but it's also the highest reward.
Yeah.
And so it's the same idea as like trading is fairly easy in general, and to make trades in green days is easy.
Yeah.
So 80% of the time when it's a normal day, no big deal. But when you have those red days, which actually we had one today,
Yeah.
when you have a red day, that's the hardest part to execute, because you're like, man, something's down 5%. This is scary.
It's very painful.
But it's the highest ROI.
Yeah.
I get so many calls with people after something runs, right? GameStop, I need to get in. Tilray, I need to get in. These cannabis stocks, get in. The move's been made, people. Like, you want to get in when we have a move down, so you're not holding the bag. That's how these bag holders happen. So it's actually flip of what these people.
It's that emotional game, Everybody wants to buy when they feel like they're missing out on something, and we call it FOMO. I mean, pretty common term these days. So, that's something that we try to like deviate from, is just subscribing to that whole fear of missing out part of it. And, goes back to that whole mantra with Warren Buffett. It's just being greedy when others are fearful.
Well, and if you believe in the stocks you're buying, then the red zone is actually a discount.
Yeah.
Like, oh, I'm getting a deal.
Right.
I'm getting savings. So
yeah, I mean, today I bought Disney, but it's a good quality company. I'm not buying something that's speculative. I'm just putting money into something that I know that's going to come back, and it hasn't really changed it that much.
So then the flip side of that is not being afraid of taking profits, where most people, it's fair to say, as far as newer traders or people who actually aren't traders, they buy when it's green and they sell when it's red because they freak out. You're flipping it around. You're saying not being able to take profits, which is when it's green.
Yeah. Yeah. I mean, a lot of people, when things just keep going, they think, well, because I'm holding it, it's going to go to the moon. And that's just not the case unless it's GameStop. And eventually GameStop ended up crashing through the floor too. So, I mean, at some point you got to take what's given to you. It's so hard to make money when you're first starting out. And it's hard to even just keep your money. Most people who start off trading within their first 3 to 6 months, if you can stay afloat and just not lose money, you're actually ahead of the game.
Yeah.
So if you can figure out how to take profit and figure that out early, you're going to be miles ahead of most people just starting out.
And the last one you have is buy best in class.
Yeah. So kind of what I was alluding to with Disney and buying that today, just having a good core group of stocks that that if you buy, that they're going to treat you well. They're going to do fine. A lot of people end up looking at stocks when they're first starting out that are priced out under $10 because they think that's all they can afford. And they look at something like Amazon and they're like, well, I can't afford that. I only have $5,000 I'm starting off with. Like that's way too much of my account. And we always like to tell people that, it's not so much the amount that it costs, per share. It's how much percentage can that move?
Yeah.
So like we would talk about Tesla all the time when it was down $400 or $500, and we're like, this thing is just a solid buy. We love, continue to tell people how bullish we are on it. And the response always was, well, it costs too much. It's too expensive. I can't afford that many shares of Tesla. Well, if you would have just bought 2 shares of Tesla, you would have doubled your money in about 3 months, those types of stocks, those types of plays don't come around all the time, but the principle, the concept's still there, that we're looking for percentage gains and upside versus the actual dollar amount. And I think that kind of like messes with people's minds, especially when they're first starting out.
So I'm going to put you on the spot, and you don't know this question I'm about to ask, but those are the keys. One of the things I wanted to discuss, since you said about the percentage and the upside, we had a question in the Chaos Crew. We were kind of going back and forth, and everybody was giving their feedback. But I want to talk about, now that you've hit PDT, and for somebody who's hit PDT, how the strategy changes. And one person had asked, like, hey, let's just say they doubled their account. I doubled my account. Should my strategy change? Should I buy more stocks? What say you about that?
I don't think your strategy should change. if you want to buy more stocks, that's fine. If you have more capital to work with, I don't think that there's anything wrong with expanding your portfolio. We always talk about diversification, so I don't think there's anything wrong with that. But I think changing your strategy, it really has to be something where you could see it paying off. You know, a lot of people automatically want to change their strategy to just strict day trading because now they're up over that PDT hump, and because they can, they just want to do it. Well, you know, if, for example, I mean, it took me 5 months to go from 5K to 25K plus, and I feel as if that's a pretty reasonable amount of time to get that up over that. And so why would I then change that strategy up? Yeah. You know, it's so much more risky to, it's riskier to just flat out go to day trading and try to think that you can make money faster doing it that way. In some cases, there's a very small percentage of people that can do that. I'm not one of them, and most of us aren't those types of people. So, you know, swing trading, making, you know, active trades, you know, short to long-term investing, I think that that's probably the key versus just straight up day trading. And that's what got me to this point. So it's kind of one of those things where I'm not going to fix it if it's not broke.
Yeah. And from a strategic perspective, you should revisit your strategy. You should look at it and say, hey, am I still good with the strategy? Do I want to move forward?
Yeah.
But to say, because I hit a number, it should change. Why would you fix something that isn't broken?
Right.
Right. And we talk about percentages. If you're operating by percentages, all it's allowing you is more buying power. I do agree with you from the perspective of if you say, hey, I don't want to sort of increase my risk profile, right? And you want to spread it out. And you're like, okay, I think if you have 10 stocks, I think 11 through 15 are just as powerful, right? I'm as confident. But if you're adding, let's say $1,000, if you're not as convinced at that stock as you are at stocks 1 through 10, put that 1,000 towards your 1 through 10, right? Like, don't just buy more stocks to buy more stocks.
Yeah.
But if you want to spread out risk, understand why you're changing your strategy. A dollar amount in your account shouldn't change your strategy. If you say, hey, you know, I just have 25% in this stock and I don't want to have 40 or 50, makes sense. So going back to your original point, which is like having that goal and having the plan, revisit the plan based on your goal and you hitting your goal and setting the next goal. But there shouldn't be much that should change. And how much, is there anything that's changing now that your account has reached PDT? What's changing for you?
Just my account size. I mean, that's really all it is. I look at good quality companies. People always talk about going in the ETFs, and it's funny. Somebody was asking like, what ETF should they get into, or do I recommend getting into? And I'm like, and they were talking about ARK, and I was like, you know, I don't really like to go in the ETFs because I know that I can outperform them. Yeah, and you can. You just got to put some work in and just kind of go and look at good quality stocks that have been beaten down for no good reason. They're fundamentally sound. They got good balance sheets, all that good stuff, and then take advantage of, you know, some of the panic selling that goes on in the market, because there's always that going on every single day.
All right. So last question. We know that you're saying anybody could do this, right?
Yeah.
Tell me, how much time do you think, ballpark, one would have to commit to actively invest swing trading to get to that point from 5,000 to 25,000?
Yeah. So, I mean, obviously I did it in a really, I think it's an incredible amount of time, just given where I started when and how long it took me. So it took me, I guess, to a point to where I could actually trade full time. It took me 5 years to get to that point. To get to a point to where I was, comfortable trading and got over that PDT hump and was continuing to build from there, I would say it took me about 2 to 2.5 years. So being able to cut that time considerably definitely is something to consider. But I think just giving yourself realistic expectations that it probably will take up to a year to 2 years to really get consistent and feel confident in every trade that you make.
And let me sorry, I wasn't clear on that. How much time invested, like on a weekly basis? Do you have to be in it every day?
No, I mean, I'm in it every day, but
that's your job.
I'm in I'm in there in the morning. That's pretty much the primary part of my day, and then I'm there towards the end of the day just to kind of see how things have been moving. I make sure all my alerts are still on. I would say 2 to 3 hours a day overall. And then you can do some studying at night to try to prepare for the morning if you want.
Well, there you have it. Follow those rules and you'll hit PDT. We guarantee it. I'm just kidding. I'm kidding. No, that was great. And again, you show this for anybody who wants to join the crew.
Yep.
You actually, every day you send out your account. You give alerts. We do trade alerts for when you're getting in, when you're getting out of something.
Yeah.
And also you take a snapshot of your portfolio to show you what you're interested in. So again, if anybody's interested in joining the crew, click the join button. If you just want to get our 5 stocks every day, that's free. Go to ownthechaos.com and you can get our free watch list. Click get free watch list. Anything to add?
That's going to do it for me.
All right, guys, don't forget to like and subscribe.
Thanks, guys.
Bye.
See ya.